Stocks trade ranged after Donald Trump points to a possible India trade deal after sending tariff letters to 14 countries. Financials and energy gain while healthcare and consumer durables drag.
Sources tell CNBC-TV18 the SEBI is weighing linking exposures and options segment to cash positions of market participants. The move follows alleged manipulation by Jane Street and the significant losses incurred by retail investors, specifically in F&O.
Kotak Mahindra Bank reports strong business growth in Q1 FY26 with advances growing ahead of expectations and deposit too seeing a healthy trend, though term deposit remain the driver.
Tightens kids after it posts weaker growth than its peers in Q1 despite a low base. What's more concerning is that the growth has come mostly from an increase in ticket size and not a rise in buyer numbers.
Donald Trump sends out tariff letters to 14 countries that it is not close to concluding trade deals with, including Japan, South Korea and Bangladesh. The new tariffs imposed from August 1 mostly mirror those in place before the pause till July 9th.
Well, hello and welcome to Halftime Report, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and with me is Bangla Malu as well as Vinny Motiwala. Well, it is turning out to be a session where it is still wait and watch, guys. So we're just waiting by for our letter to come through.
So Pariksha tells us that our letter will actually be a letter of acceptance and not a letter of tariff because we are very close to getting a trade deal. But be that as it may, the broader markets, the portfolios would feel a little bit of a pinch in today's session because you have 1,700 stocks which are declining, just about 900 which are doing a lot better in today's trading session. The mid cap, the small cap, as well as the Nifty next 50. If you pull out those broader market indices, you would see that, letter or no letter, the portfolios are in the red, a fair amount that too, because the lines intersected sometime at around 10:30 and thereafter the red line has moved much higher. The frontline index, range bound today, the Nifty bank is doing better thanks to Kotak Mahindra Bank.
Absolutely. Thanks to Kotak Mahindra Bank, we're managing to see some bit of a green there for Nifty Bank. But other than that, only IT is the other sector that's only managing to hold on to green. And some of these textile names, Ekta, which we're seeing some bit of a green because of obviously possibility of a good tariff deal could support textiles. And Bangladesh, the rate being higher for Bangladesh versus what we're seeing right now is something.
So the story is that, whether we get our letter or not, it's okay. So long as Bangladesh got its 35% letter. So this is where
everyone is above us right now, except Vietnam, which is seeing some bit of a benefit if the rates increase. So,
but maybe we need to actually really ramp up our manufacturing when it comes to textiles to, take advantage of the situation. But nonetheless, that's a conversation for a different day or a different topic. As of now, we do have a lot of the frontline indices which are under pressure as well. So, or frontline stocks under pressure, such as Titan, Dr. Reddy's, all of these stocks which are in focus. But let's start talking about one frontline stock. Kotak Mahindra Bank is the top Nifty gainer after a strong first quarter business update. Gaurav is here to tell us more about it. Gaurav, go ahead.
Well, yes, as you said, Kotak Mahindra Bank actually came up with a very strong number. 14% growth is what we are seeing in terms of advances on a year-on-year basis. And this also translates into around 4% growth on a sequential basis. Now, let's not forget, Q1 is usually weak. And on that front, Kotak Mahindra Bank is actually doing well, more than industry, as well as more than what the consensus were expecting from the Kotak Mahindra Bank. Other than that, from deposits, there also we are seeing some good growth. 14.5% on a year-on-year basis is what we are seeing in terms of deposits growth, and this was actually specifically led by the term deposits because when it comes to CASA ratio and specifically the CASA deposits, there we saw a little bit of softness on a year-on-year basis, but again Q1 is a little weak on a CASA front, and that is the reason Street is actually expecting the same kind of trend to happen for other banks as well, and that is what is happening in Kotak Bank as well. What we are likely to see is that the NIMs is something that we should be watching out for because the mix of this advances is something which is really important for Kotak Mahindra Bank at this moment because we know that for the last few quarters they are actually bringing down their unsecured segment. So definitely that is something that we should be watching out for. But at this moment, a good set of number in terms of provisional update, and as a result, we are also seeing stock is also up in trade today.
All right, we take that point. Thanks a lot for that. Let's move on and talk about an exclusive story that Yash is bringing to us. Sources tell CNBC-TV18 that the SEBI may consider linking options leverage to cash positions. Yash, if this move does indeed take place, then a lot of the option volumes may dry up. That's perhaps reflecting in the kind of moves that we're seeing in a lot of these capital market plays as well.
Well, this seems to be a fallout largely of SEBI's investigation and action against Jane Street. What we've been given to understand from our sources is that market regulator may consider linking options market leverage to cash market positions. To simply explain this, SEBI is considering a proposal where only if you have certain amount of exposure in the underlying cash market, equivalent to that, like a multiple of that, could be the allowance as far as the options market exposure is concerned. Options market could be linked to the equivalent cash market through a derived formula. As I said, a formula will be put in terms of the cash market exposure, and a multiple of that could be allowed as far as the options market exposure is concerned. According to our sources, four things are what SEBI plans to achieve through this particular mechanism. One, increasing cash market liquidity. Second, reducing options market liquidity. Third, reducing excessive speculation and protecting retail investors. And fourth one, cut down on the ability of institutions like Jane Street to manipulate indices and make fast money. SEBI is also considering various other steps to sort of identify and plug any more loopholes as far as the options market is concerned. All these proposals could be discussed by SEBI's board very, very soon. Apart from that, to increase cash market liquidity, SEBI is considering a couple of steps like, allowing shorting in the cash market, also enhancing the SLBM or the loan against shares mechanism.
Okay, Yash, thank you so much for that. We'll be keeping an eye out on these capital market names as well, whether BSE, MCX, Nuvama, Angel One, all of them also in focus. But on that note, we're going to slip into a very short break. But remember to tune in to the all-new CNBC-TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC-TV18 Prime decodes global shifts and their impact on Indian businesses, giving unparalleled insights. Tune in to CNBC-TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m.
Welcome back. Well, it's time for a special segment, Quarter Se Quarter Tak, where we bring you earning expectations from each sector. Today, Reema is going to tell us Q1 FY26. How will it possibly be for the IT space? Reema, will we see some good news for the IT sector in this quarter?
Well, unlikely. So you're not going to see the usual strength that we typically see in Q1 because so far the visibility on demand reviving is very low. So let's look at the early indications from the CNBC-TV18 poll. Well, large caps are showing weakness while mid caps continue to lead the charge. This is the large cap picture, and as you can see, 4 out of the 5 large cap IT companies are likely to report a decline in their revenue. Commentary across the board is likely to reflect that while the macro environment hasn't improved in the last 3 months, the good part is it hasn't deteriorated. Now, a little bit more about the guidance. Now, Infosys is likely to raise the current guidance. It stands at 0 to 3%, but they made acquisitions, and therefore that guidance could be upped. If the lower end of the guidance is raised from the current 0 to 1%, it's unlikely to signal anything positive. It's the upper end which needs to move on an organic basis. Now moving on to HCL Tech. HCL Tech too could upgrade the lower end of its guidance. So 2 to 5% may become 3 to 5%. But here is where the good news comes in. Mid-caps are likely to outperform and very strong growth. Look at Coforge. That's been leading the charge in the mid-cap space, and we're expecting about a 6.5–7% kind of a constant currency revenue growth on a quarter-on-quarter basis. Persistent is close to about 3.5–4%, and that's been the revenue run rate, at least quarterly growth rates for Persistent over the last couple of quarters, 3–4%. That's going to continue. Hexafair and Emphasis also upbeat. So mid-caps are likely to report stronger growth, and this is led by some market share gains and favorable portfolio. For instance, a few mid-cap companies have a little less exposure to manufacturing. So that's the key, takeaway. Large caps weak, mid-caps will continue. Now moving on to the stock price performance. As we've been highlighting, mid-cap IT has underperformed. On a year-to-date basis, the Nifty IT has underperformed by nearly 17%. Valuations for large caps are similar to their 5-year averages. But then again, they've got muted revenue. Earnings growth is expected to be fairly muted for the large cap IT companies. So in that context, even if the valuations are not expensive, are they cheap? It's the mid-caps where you are seeing a valuation premium. Now, the mid-cap IT companies are trading at 32–33 times PE on an average, much about a 38–40% premium to large cap IT, which is at about 23-24 times. But that's because the mid-cap IT companies are also likely to report stronger growth. With high valuations are coming strong growth expectations. So this is the EPS estimates for mid-cap IT companies over FY25 to FY27. We spoke about Coforge's strong top-line growth this quarter of 6.5%. Well, they're likely to report a 38% EPS CAGR growth over FY25 to 27%. Hexaware Persistent could see about a 20% kind of growth, much higher than the single-digit EPS growth that large-cap IT companies are going to report. Now, what to watch from TCS, because that's the first one off the block on the 10th? Well, constant currency is likely to decline by 1.5%. The what to watch, the company last quarter told us that the international revenue growth, that's ex of BSNL, in FY26 is going to be better than FY25. Do they hold on to that? Does that commentary get stronger? And one puzzling factor for all analysts is that, margin expectations are not going up. And this is despite reduced contribution coming in from the low margin BSNL deal. So why is that not happening? Why are margins not expanding for TCS? And also, if you remember, last quarter, they decided to defer the wage hike. So the timing of the wage hike will be watched very closely this time. Back to you.
Okay, Reema, thank you so much for that. It will be important to watch out for IT companies, large cap IT companies not expected to do well. But on that note, we're going to slip into a very short break. Up next, we'll come back and talk about Trump tariff impacts on textile stocks and how is that expected to do going forward as well. We'll have Prerna Junjunwala of Elara Capital joining in with us.
Welcome back. You're watching us here on Halftime Report. We are seeing incremental pressure over the broader markets, down almost 0.8%. And a lot of these capital market plays are seeing a big cash. We have MCX, which is down 3.5%. Angel One down 6%. BSE itself is lower. And alongside that, we have names like 361 WAM as well, lower in today's trading session. But all eyes are on whether India gets a trade deal with the US or not. Parikshit joins in with the latest on what his sources are telling him. Parikshit, a deal very near for both India and US, at least a mini deal?
Well, Donald Trump says they are close to a trade deal with India. Frankly, everything is up to Donald Trump now. From the Indian side, we've given a decent proposal, a decent offer for a trade deal, which gives good access to industrial products from the US side to India, and also good access for labor-intensive sectors, MSMEs and SMEs from the India market. India has also drawn red lines that there can be no concessions on wheat, rice, maize, dairy, sensitive areas in agriculture and dairy, because they are very important for our farmers. And this is not just for US, it's for any trade deal, any country for that matter. We cannot offer concessions on these fronts. For the moment, sources telling us that negotiations from the Indian side are over. We've offered whatever we could and made the best offer we could to the US. It's really up to them to accept this now or give a hint or give an indication that they want more negotiations in the days to come. So what we understand is that Donald Trump and the White House are now assessing India's offer to see what are the kind of gains and wins that US companies are getting from this deal. Maybe in the next 24 to 48 hours, we will have some clarity. But sources also telling us that India is not just putting all its bets on the United States. We are working to have trade deals with multiple countries. Those negotiations are on simultaneously. And India is looking at various options to increase its export footprint as well.
It's in best interest of India as well. So you say 24 to 48 hours, we either get a deal or we get a letter. Is that what it is?
It could be anything, Mangalam, frankly. It could be a letter stating that we accept your offer for a trade deal and we want to have an interim trade deal with you. Or it could be a letter saying that we are going to impose a reciprocal tariff on you. So let's see what happens. It's really up to Donald Trump. But India now, and sources here in the government saying that we are ready for any eventuality after drawing our red lines and giving the best offer.
It's up to Donald Trump. So let's actually go across and listen to what Donald Trump actually had to say on the trade negotiations with the partners, including India, where he mentioned that he's close to a deal after sending out a bunch of tariff letters to multiple countries. He's also said that these tariff letters are not a negotiation tactic, but they're pretty much the best that they can do.
If they call up and they say, would like to do something a different way, we're going to be open to that. But essentially, that's the way it is right now, yeah.
Are the tariff letters that you sent today final offers, or are they negotiable?
More or less final offer. We've made a deal with United Kingdom. We've made a deal with China. We've made a deal. We're close to making a deal with India. Others we met with, and we don't think we're going to be able to make a deal, so we just send them a letter. If you want to play ball, you have to. This is what you have to pay. So as far as I'm concerned, we're done. We're sending out letters to various countries, telling them how much tariffs they have to pay. Some will maybe adjust a little bit, depending if they have a cause. We're not going to be unfair about it. And actually, it's a small fraction compared to what we should be getting. We could be asking for much more, but for the sake of relationships that we've had with a lot of really good countries, we're doing the way I do it.
Okay, all right. Staying with the entire tariff discussion to talk more about the impact on textiles, we have with us Prerna Jhunjhunwala, who's the Vice President at Elara Capital, joining in on the line for her quick take. Well, Prerna, welcome to the show. Bangladesh has around 35% on textile imports in terms of a tariff, and that's a slight reduction from, say, what was imposed in April this year of around 37%. Vietnam, 20% in terms of textile imports. So given this, where does India stand to benefit?
Hello. In India, it all depends on the trade deal that is getting signed with the USA. As of now, with the no trade deal, we are at 26% after the baseline tariff gets over. But if we are signing a trade deal, we are confident that the tariff rate for India would be lower than these two countries, which should benefit in Indian textile sector for sure. Given that our players, our cost structure is positive, except the advantage that these countries.
What about
to gain market share?
Okay, we have you on a scratchy line, Prerna. We're just trying to repatch that connection. India doesn't have a trade deal right now. It's about 28% is the tariff. They've shot off a letter to Bangladesh saying that it'll be 35%. Could you give us a sense on what Bangladesh's share of revenue from the US is? How does that compare with India? And what is the differential in cost of production for both Bangladesh and India?
Yeah, so the major differential on the cost front for Bangladesh and India is the labor advantage that they have. Their cost of labor is around $115 per month, whereas for India it is between $150 to $170 per month. So that would translate to a disadvantage for Indian cost structure by about 10 to 12%, which gets settled if the tariff rates are higher for Bangladesh against India. In Bangladesh market share for apparels is about 9.3% which equates to around $7.3 billion for the US imports, whereas for India it is 5.9%, which equates to around $4.7 billion in CY24. So we have we have a differential of about 4% for total apparel imports of US, and that's where the opportunity lies.
Prerna, what about if the rate for India, there's no change in that, it's at that 26% which is currently there, then would we still have a benefit against Bangladesh, or that's not possible then? Given that, you're talking about the labor cost as well.
I think we will still have benefit against Bangladesh because we'll at least be at par on the cost structure, because as I mentioned earlier, we are at a 10 to 12% disadvantage on the cost structure because of labor. And that gets settled with the tariff differential.
Okay. Well, Prerna, where do we come in when it comes to taking advantage or real advantage of the opportunity in terms of scale and manufacturing capacity?
So Bangladesh is definitely much higher on scale than us today. They are at around $40 billion of overall exports of garmenting to the world as compared to India, which is at about $17 billion. So we need to definitely scale up our manufacturing capacities in the garmenting for sure to take advantage meaningfully from this tariff differential.
Prerna, there were some reports that were also suggesting, more like channel checks suggesting that, currently in terms of demand trends, there's high demand coming in for the spinning yarn, spinning mill side. Is that something you've seen on ground, especially, players given in Tripura and the China Plus One is working out for them? Is that something you've watched out for right now?
As of now, we're not seeing a very huge improvement in demand because there is a lot of uncertainty at this point in time from U.S. markets. Orders from U.S. markets are not at par with what they were at earlier in the same months. So export markets are not very favorable at this point in time. And in Indian markets also, we are not seeing a huge demand propping up because of weakness in the total apparel industry in the Indian market. So we're not seeing a major improvement or any order inflow in a major term for Indian spinners at this point in time.
So given all things where we stand with, tariffs, global demand, the raw material prices, our production, our costs, everything considered, what, according to you, would be the top picks that one should look at if they want to make a bet on the textile space? If you could give us a couple of names.
So we have a buy rating on Arvind Limited. That is our top pick from our coverage. We also like home textile players who have capacities in place and are having client relationships currently with most of the geographies that we are signing FTAs with, because India is not only a story on US tariff differential, it is also a story which is structurally panning out for FTAs being signed globally, which government is trying hard. So, and textiles will be a major beneficiary of the same. So, home textile players who are having exposure to the and European markets as client relationship should gain and as well, along with government companies. So Indocount and Welspun are our preferred companies in home textile space. In garmenting, any company which is expanding capacities should gain. So we like KPR from long-term perspective, plus Pearl Global, Gokalda.
Okay.
Sure. Prerna, I think we've got on a bad line, but I'm just going to try my luck. From a company perspective, not from a picks perspective, from a company perspective, which one do you think would probably be most at an advantage to take, to benefit?
So from the company specific, that's what I mentioned, that the companies which will benefit the most are the companies which are expanding the most, because India doesn't have capacities. So companies like Pearl Global, Kitex, who are expanding real time to gain advantage of this situation, should benefit, though we do not have any rating on these companies.
Okay. Companies who are expanding will benefit the most. Thank you so much, Prerna, for joining in with us and giving us your views on the textile sector and what we're expecting in terms of Trump tariffs and which companies would benefit as well. But on that note, we're actually going to slip into a very short break. On the other side, we'll come back and Manisha Gupta will join in with us with Sumit Gupta of Avasara Global Commodities. Stay tuned in for that.
Welcome back. Joining us on the show is Sumit Gupta. He's CEO of Avasara Global Commodities. Sumit, hi, thank you so much for joining in. Your first reaction on the sowing numbers. While we do understand that the monsoon has been quite well, we've seen 14% above normal monsoon until time. But the sowing numbers, are they slightly confusing because we've seen sowing across board increase?
Hi, good noon, ma'am, and thank you very much for having me on the show. You know, monsoon and sowing numbers are two things which are completely interrelated because I was reading a book in which it was rightly and aptly defined that monsoon is the agriculture minister of India, and it is the one which decides the fate of almost 100 million farmers in this country. So, coming on the look at the monsoon this week has came a week early, around 23rd of May, and the monsoon has reached North India significantly earlier or week earlier than usually timelines. And in terms of spread of rain, what is more important to see, we have seen there are surplus pockets in central India, and there is slight shortfall, which is deficit, which is building up in Marathwada region, and it is not so evenly distributed in parts of Karnataka and Maharashtra. And if we look for the forecast of July month, it is not looking as great for Maharashtra and Karnataka, though IMD says the rainfall will be surplus in July. In total numbers, yes, it can be, but in terms of spread of rainfall is more important to witness for us. And as we are putting the number of or the planting number, which is more critical, the sowing is early, sowing is not more. Because if you compare the last year's sowing number and this year's sowing numbers, and superimpose it with the monsoon arrival dates. Last year monsoon came late, and monsoon was not as good in June. Okay, this year we had very good pre-monsoon rainfall in May. It was one of the most wet May month in last maybe 50, 60 odd years. And then we had good June onset because of early onset of monsoon. And because of that, what we are witnessing at the moment is early sowing, not more sowing. Okay.
I get your point on that, Sumit, and very, very well said on that. But also, as we move ahead from here, pulses, of course, have been trading below MSP. We've seen some concerns for oilseeds as well. How would you look at the core cereals, something like maize, where there's a lot of thrust at this point in time? By the time it's July end or mid-September, that is until when the sowing for Kharif continues, where do you see more numbers continue to emerge?
In terms of, if I have to look at from the planting numbers point of view, today farmer has no option. Minimum MSP is not minimum support price, it's a maximum sale price possible for farmer at the moment. Because government is providing, in a way, support to farmer to sell it to them. But if you look at the procurement of pulses, if I'm not wrong, chickpeas is around 400,000 tons. Pigeon peas is around 600,000 tons as against production of 10 million tons in chickpeas and around 4 million tons in pigeon peas, and all commodities are still trading below MSP, and that is the case in oilseeds also. So farmer has no option but to either to move to pulses or oilseed. Last year, farmer has done this thing because pulses prices are significantly higher. And you have raised a very pertinent point on maize. Maize prices last 2 years have been pretty friendly for the farmer, and last year farmer responded with acreage increase. But with the government policy on the rice release to the ethanol plants, actually it has taken the incentive away from the ethanol plants to depend solely on maize. And that is where maize prices also for the large part of the season has traded below MSP. So, and given an option and looking at the benign rainfall which we are witnessing across the country, farmers will go for the aggressive crop. When I'm saying aggressive crop, that means where there is an upward yield potential. And which is that commodity? That is maize, largely in central, western, and south India. So you might see maize acreages significantly jumping over last year numbers. Soybean acreages may go down, and pulses may stay where they are. So overall, there will be a recalibration in favor of maize.
So, Sumit, when you say maize numbers could go higher, is there a percentage number that you're putting out there?
Yes, in terms of number, what we are witnessing potentially, central India, it can be as high as 15 to 20%. And on pan-India basis, it will be higher by 6 to 7%. On maize.
The other thing is the food grain numbers, Sumit, because every year we see government put out yet another record number in sense of food grain production from 2023-24, where it was a record number at 332 million tons. For 25-26, the number has been put at 354 million tons. Do you see India achieving those kind of great numbers?
And I will ask a question back to you, Manisha ji, about that. Okay, India is not exporting anything apart from rice. That means indirectly we are saying India is consuming more because government is not building stock. We are not exporting much. That means India is consuming a lot more grains than they were. One number that you can put is in ethanol. India, yes, is consuming 18 million tons of grains more year on year because of the ethanol blending program. In last, let's say this number has gone up from 2 million tons to 17, 18 million tons in last 3 years. Okay. But what about other consumption? And we should feel proud if that thing is happening. That means India's economic prosperity is working. Okay? And over a period of time, this deficit is going to grow bigger because Shivraj Chauhan ji yesterday made a statement that we will double our maize production by 2047. But is it sufficient? Because we are going to double our consumption in next 9 to 10 years. Okay? So our consumption is moving at a rapid pace, and we have to look at those numbers along with the increase in production.
All right, Manisha, thank you for taking us through this conversation. Sumit, two nice punchlines you gave us. One was that MSP is maximum sale price and not minimum support price, and agriculture is monsoon is the agriculture minister of the country. Wow, I'll take those two with me along with the insights that you've given us as well. Take a short break, come back on the other side. Sachidanand Tekar from Trade Bulls joins in to give us some trading strategies. But if this morning you hit a snooze button and just caught up, you have missed nothing on the Nifty. That's exactly what the ticker is telling you. Absolutely flat on the frontline index. In fact, yesterday's close on the Nifty was also 0.3 points, if you must. And right now it's just about 3 points on the way up, though it's recovered from the lows. And the range has been very narrow on the frontline index. So both the Nifty as well as the Nifty, the Sensex, if you look at it, the frontline indices, they are consolidating. But the key sectoral indices which are doing well are the Nifty Bank and the Nifty IT. Both of them come up for you, and that's a good sign for the market. The broader markets, they are under pressure. We look at the Nifty mid-cap index, the small-cap index, the next 50, all of them down by almost 0.5% to 0.2% in some cases, with the advance decline far outnumbering, the declines far outnumbering the advances itself. The option writers aren't expecting a major shift from this range, because if you look at it, the 25,500 call writers are still active. The premium of 50 rupees telling you 25,550, thereabouts, little closer to 25,600 there will be supply. But at the lower levels, 25,400 put is equally active for a premium of 65 rupees, telling you that around levels of 25,350 there would be support. So broad range, 25,350 to 25,600, no different from where we've been on the Nifty for the last many days. A lot of short positions added on these capital market plays. We've been talking about Angel One, BSC, CDSL, and a lot of long positions. However, on the other side, we have HDFC AMC, which is seeing some long positions being added, and Kotak Mahindra Bank, of course, after their first quarter update, is seeing fairly well long position build-up sort of bids coming in on that stock.
Okay, all right. So that's the FNO setup. We have Sachidanand Tekar from Trade Bulls joining in to discuss the technicals of the market now. Sachi, thanks very much for joining in. If you could just give us a sense in terms of the Nifty strategy, considering that we've been in this consolidatory sort of mode in the past few sessions.
Good afternoon, Ekta. Good afternoon, Mangalam. I think clearly, the market is displaying that pause. But if you look at the overall trend structure, for the last 9 weeks or so, the Nifty has maintained its closing above its 5-week exponential moving average support. Now, this particular support is placed at 25,315 kind of a zone. And that's why I think the writers are also adamant out there. We are not expecting any move below this particular level, and hence the strategy has always been to accumulate Nifty close to that, close to its 5-day exponential moving average support, which is placed around 25,400. On the lower side, one can keep a stop loss at 25,320 on a closing basis. Eventually, we are of the opinion that the Nifty may scale towards 25,700 and even surpass that particular hurdle to rally towards 26,000. If you look at the overall structure on the weekly scale, the positioning of the weekly ADX is very important. It is on a verge of a breakout. Right now, it is quoting somewhere close to around 24, and a breakout of about 25 would be a strong indication of directional momentum. So I think this pause is healthy for the overall trend structure. The bias remains positive and the buy on declines strategy continues. One can keep a stop loss at 25,320 on a closing basis and expect a rebound back towards 25,700 during this particular week.
Okay. Sachidanand, also, what's your thought coming in on the Nifty Bank? What are the levels we should keep an eye out on there as well, given Kotak came out with good, Q1 updates coming in this time? Is there something important to watch out for there in today's trading session, as well as your top bets also that you're looking at?
For Nifty Bank, the data is suggesting a wide range towards 56,500 as a support and 57,500 as a immediate hurdle. But if you look at 60 minutes charts, there is a good convergence of its short-term averages, and that's why we believe that this relative outperformance may continue and in fact may lead the Nifty as well to break out above that 25,500 juncture. So I think one can keep a stop loss at 56,920 from a trading perspective and expect a swing back towards 57,500. So bias for both the indices remain positive. Nifty Bank, as of today, is placed very well, but eventually we see that Nifty could swing towards that 25,500 hurdle and move towards 25,700. When we look at stock, both the counters that we are discussing right now we have communicated to our clients as well. That will be my disclosure. The first one is Tata Motors. If you look at the overall structure for the last 4 trading sessions, the stock has been consolidating well. It has managed to sustain above its 50-day exponential moving average support, which is placed somewhere close to around 692. Even on the 60 minutes chart, so we are observing a kind of a triangular formation, which is again a consolidation contraction. We are expecting that the stock could see a good breakout above that 710 mark, and we may see a rally towards 750. Hence, we are recommending building long positions, keeping a stop loss at 688 on a closing basis. The first target would be around 710. The second target is placed at 750. The second stock which we have recommended is from the same space. Uno Minda has been in a very strong uptrend. If you look at the daily chart, there's a bullish pennant formation, which is again a good sign of continuation of strength. The OI addition has been significant, and we are expecting that this particular rally may continue towards its pattern target, which is placed at around 1230. Hence, we are recommending building fresh long positions here. One can keep a stop loss at 1088 on closing basis.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and taking us through your strategies. We need to take a short break, but as we do that, here is some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or just scan the QR code on your screen.
Welcome back to Halftime Report on CNBC TV18. As of now, the last hour we've seen 361 RAM. That's seen a bit of an increase coming in for the day's lowest point. Credit Access Gramin, Angel One, which has seen also an increase from the day's lowest point. So keep an eye out on all the stocks in today's trading session as well. We've seen a fall coming in all these names today, but some bit of a recovery from the day's low is what we're watching out for. But let's keep an eye out on the pharma pack as well. Why are they buzzing in today's trading session? Seems like a lot of brokerages have come in as well this morning, Ekta.
Well, yes, I'll start with HSBC, which is written on Divi's Labs. They've upgraded the stock to buy, and a target price which is raised to 7,900 from around 5,000 odd rupees. According to them, there are long-term growth drivers driven by tirzepatide as well as other peptides and contrast media. They see a revenue potential of around $450 million from peptides and around $260 million from contrast media by 2030. They forecast FY25 to FY28 EPS CAGR of around 23%. Macquarie has written on pharmaceuticals as a whole. They've revisited the export-focused pharma space. US generics market is under pressure. Price erosion is expected to accelerate due to fewer drug shortages. Revlimid generic is nearing the end of exclusivity. Early than expected price erosion is likely to impact Q1 FY26 results for key players. Lower PE multiples for US-focused generic companies are possibly something that they're looking at amid changing dynamics. So they've downgraded Aurobindo to underperform. They've downgraded Dr. Reddy's to neutral. Cipla, Zydus, Lupin maintain their outperform, but they've cut the target prices on all three of them. Sun Pharma, they've reiterated an outperform with a target price of 2,135. Minimal US generics exposure benefits the outlook according to them. That's on the pharmaceutical space. But Leela Hotels is also in focus after Bank of America and Morgan Stanley have issued a coverage on the stock. Mangalam, you're looking at that. Tell us more.
Yep, the hotel sector has been on a cyclical uptrend, and that's exactly what they're betting on for Leela as well. Both Bank of America and Morgan Stanley have initiated coverage buy rating or overweight rating as far as Morgan Stanley is concerned, and they have target prices between 520 and 549. The thesis is pretty similar. The valuation is attractive at 20x FY27 earnings to EBITDA, and you have 12% revenue CAGR and 14% EBITDA CAGR that BofA is expecting, with net profit actually compounding at over 90% for the next 3 years on a very low base. Morgan Stanley says that the only risk to watch out for will be the concentration risk, where a large part of the revenue comes in from a small number of hotels. But apart from that, EBITDA grows at 12% over the next couple of years. Net income actually compounds and grows all the way up to 9 times as interest costs come down as well. So balance sheet of the company is nearly debt-free, leaving a lot of free cash flow to fund the upcoming capex cycle. So the hotel industry is doing well, and in that we have this one, which is a fairly interesting play as per these two brokerages.
Absolutely, but not only that, Mangalam, we're seeing Titan also that's in focus today, and that's on the back of its Q1 updates. Not anything exciting, right? So not glittering today.
Titan's not glittering in today's trading session, and a large part of that could actually have to do with Maharashtra. Why is that? Because, the same time last year, we had Gudi Padwa in the base, and this year Gudi Padwa was in the fourth quarter. And if you compare Titan's numbers to, say, someone like a Kalyan or a Senco, it would look a lot lower because Kalyan reported 31% growth, Senco reported 24% growth. A large part of Kalyan's revenue comes in from the southern part of the country. A large part of Senco's numbers come in from the eastern part of the country. So not much exposure to Gudi Padwa. But if you discount for that as well, 18% growth is what the company has reported. Gold price volatility affecting consumer sentiment is what they've said. Studded ratio was lower as demand for plain gold has come in at mid-teens, whereas studded has grown in early double-digit, which means that margins could be under pressure, and that's a bigger problem as against just the revenue growth of 18%. Buyer growth was flat as well. Some of their ancillary businesses did fairly well. Watches grew 23%, no problems there. Emerging markets led by the fragrances and women's bags business grew by 38%, though not very strong for the Taneira business, which is the saris business. And CaratLane grew about 38% as well out there too. There was decent same-store sales growth. Around 11 to 12% is what the company's overall same-store sales growth has been. The analysts were expecting 20 to 21%. In light of that, the company has reported 18%, which is why there is further disappointment on that stock.
Absolutely. Well, Titan is definitely losing ground in today's trading session. It's the top loser on the Nifty at this point in time, down around 5.5%. Thanks, Mangalam, for that. Well, for the markets as a whole, we have the mid-cap index, which has recovered a tad bit, so just about lower by around 0.3% at this point in time. Advanced decline ratio still needs some kind of improvements, around 1,700 stocks advancing to around 2,000 stocks declining at this point. In terms of specific stocks from the broader markets, what really stands out in terms of gainers as well as good amount of volume is Edelweiss Financial. That stock is up around 1.5%, but trading on great volumes. And even Info Edge is up around 2% trading with big volumes in today's trading session. So those are a couple of broader market stocks which do stand out. Padamji Paper is down 2.5% from the broader markets. We have Moil, which is down around 2% as well at this point. Overall, quiet day for the Nifty, just about higher by around 15 odd points. Biding time before we do get that letter or trade deal. So let's see what takes place there. As of now, it's a wrap on halftime report. Business Lunch will take all the action forward.